at the last minute.
Barely made it. Yeah.
All right. Good deal. All right. Well, we're ready to go here. So if you have any questions, like Scott said, the questions box is open. I'll kind of get on a roll, and if it can be answered by Andy, he'll type the question response to you. But again, if you come in late or if you missed it altogether, you can't hear me saying that. But we will be recording this, and it will be up on the YouTube website, our channel, in a few hours later tonight, or at the latest tomorrow morning. All right, let's get started. You can see my screen, I take it. Good. Welcome Trade of the Week, June 16th, 26th edition, excuse me. Let's get right into it. Always reminding you guys that we're a software as a service, a subscriber company. We provide content, so we're not providing registered investment advice. If you're looking for investment advice specific to your needs or your family's needs, you got to seek out the right guys, people with the brokerage licenses or the RAA designations. So nothing you should see or hear in this webinar should be construed as investment advice. All right. Just a quick reminder that you're never alone. We have a very robust product, 14 years in development, a lot of layers to it, and so there is a learning curve. But we try to help with that learning curve, primarily with the afternoon webinars, such as right now. We do these 5 o'clock Eastern webinars Monday through Thursday. You can see the top billings on your screen. Over on the right, we also have the live trading room. Barry Anderson hosts a live trading room, which, by the way, is free. And a lot of people tell us this room is just as good as a lot of other rooms out there that pay money to join the room. So you don't have to be a user of Trade Ideas to join the room. It's a free service. You can drop by our website anytime and follow the instructions to create a user and password to get in there. Barry has been on vacation, well deserved, because very difficult to do what he does, but he'll be back in his chair, I'm told, tomorrow. Actually, the 27th is what he said. So for those of you that were missing Barry in the live trading room, he should be back tomorrow, and probably, hopefully, very much recharged. All right, beyond that, the live trading room, which goes bell to bell, the afternoon webinars at 5 Eastern, we have a Friday support session there at the bottom of the slide, and that is 3 hours of open-ended content. You guys come in and tell us what you want to talk about, what kind of information you need to help to help yourself with the TI platform, because we recognize, as I said, it's a very in-depth platform. And as much instruction is needed, we're here for you guys. And so 3 hours is a great time to stop by. You can see the time, 11 to 2 Eastern, same format as we're doing right here on the GoToWebinar with the questions, but we just let you guys determine where we go next, and we give you all visuals and build a couple of alerts and demonstrate some stuff. Lastly, at the bottom down there is TI University, Monday through Thursday. Now this is during market hours, 12 to 1:30 Eastern. I just did the 201 class today. So here's how it works, guys. When you sign up for Trade Ideas, we want to get you up to speed as quickly as possible. So we have a 4-day course. It starts every Monday and finishes with advanced 401 on Thursdays. And this is just kind of a quick breakdown of what you could expect to see. Like I said, same eco environment as we have here, the GoToWebinar system, and we share our screens, and it's a great way to also get some questions and answers at the end of each of these sessions. We open the floor. So a lot of ways for you all to come on in and get the information you need, and all that translates back to the growth, the hyper growth. These are quarterly bars that we've been experiencing due to just the great staff we have here, the great product we offer, and of course the artificial intelligence kind of kicked off that parabolic move, and we'll get into some more of that today. So today we'll check in a moment what the syllabus is or the agenda, but I just got to remind everybody that we're working with a machine here. Trade Ideas is not a substitute to just plug in and watch the coins just fall out of the machine into your bank. It's just not what's going to happen. You still have to trade the market. You still have to observe the market and be discretionary and understand that the market is a big machine that is very subjective, and we all approach it differently, different time frames, different horizons, different risk management, etc. So, the phrase is, no man is better than a machine. However, a machine is better. Let me start over. No man is better than a machine, and no machine is better than a human with a machine. And that's where we are. We are the human discretionary trader using Trade Ideas technology platform as the machine, and the two of us together really make for a good partnership. All right, here is our agenda for June 26th. Got a market recap, a lot to talk about. I've got some Holly recap to talk about. I have a couple of trades I looked at. I don't know if Andy's had a chance to look at a few, but it doesn't really matter. We'll delve into that. And I'm going to show you and also read you a description that we actually got hot off the press on the three buckets of AI now. Those of you who have been paying attention, we have two new Hollies, Holly 2.0 and Holly Neo. So there's three total pools of AI triggers and alerts taking place. And I got some visuals for you all and maybe try and redefine what the two newer versions are for people. We'll get into the trade of the week. Obviously, the theme of this webinar did not trigger yet, but I'm happy about that. I'm going to explain why. It's time to take a look at the sector glance. The market has a way of passing the baton from sector to sector, so Andy and I will look at those charts raw. Haven't even looked at them yet. We're going to look at them together for the first time, and then time permitting, maybe a couple of individual stock chart requests if you guys have one. So let's just go ahead and get right into it. We'll minimize that, and welcome to my desktop here. We're going to start with the market recap. Now, I do the same market recap for Jamie on the Monday afternoon webinars, and what I mentioned was we were really trying to build a base back here at this prior pivot level where resistance was back here. It became support for a few days, but then over the weekend it gapped down and through back into no man's land. And as far as the S&P is concerned, the SPY, for the most part, close enough for government work, but you could see it was well off its lows yesterday and kind of came back and closed very much near this secondary pivot level that I've been drawing. Resistance back here, support right here, and it also tried to capture that blue 50-day moving average. So a valiant attempt by the market to recapture that, and what do you know, today we actually did. We recaptured it, and we did it in the glorious style of a perfect doji, meaning the market opened right here, threw some elbows up, threw some elbows down, and closed in a non-event right where we opened. So just a lot of noise, but no real direction. But it was a slight uptick, and it is now above its pivot and its 50-day moving average, so a small golf clap for the SPYs. But if we had closed yesterday on lows without this bottoming tail that kind of came in late day buying, it could have been a little bit more uglier today, so that was kind of setting the precursor for today. And if we go over to the Q, it's kind of the same story. The NASDAQ, also a very close to perfect doji. Market opened up, threw some elbows to the downside, threw some elbows to the upside, and pretty much closed right where it started. No real significance, except I could come in here. I don't know, this line should have been in there already, but this was prior resistance here, and then we shot through it, and then what do you know, the NASDAQ complied yesterday and did bounce down, but managed to close above its major pivot line. So as far as the damage that was done yesterday, the Dow and the S&P, they got the brunt of it. NASDAQ, not so much. Let's go to the Dow. The Dow, technically, a lot of discussion yesterday. This is the ETF DIA, but the actual index closed below its 200-day moving average, and that was not lost on a lot of people. A lot of institutional money was noticing that, and again today was still fighting it, but couldn't get back above that 50-day. So the Dow kind of came limping into today, being the worst, the weakest of the four ETFs that we study here, and it looks like it still is maintaining that weakness. I'll tell you what they don't want to see in the Dow is more downside movement going much more below this 200-day, because as you see, we tested it here, but never closed below it until yesterday. So the Dow was throwing up a little bit of warning signals, but on the flip side, the IWM was holding up the best, the Russell 2000 small cap index. Once again, guys, clockwork. I don't draw these orange lines for nothing. Prior resistance, a little bit of congestion, 3 days of congestion, and then boom, we erased about 15 days of up moves and about 2 or 3 days of down candles, but notice where we bounced. So these daily charts can really come in handy in the throngs of battle as the selling is increasing and you're wondering, when the hell is this selling going to stop? Well, that's when you want to sometimes bring up a daily chart and start looking for these pivot levels, because right on cue, IWM did exactly what it should have yesterday, bounced right off that prior resistance current support level, naming it a pivot level. So all those things aside, again, the SPY and the Dow look the worst. They've got a little bit of work to do, but they're still trying to put in possibly a higher low. And a higher low is what signifies a trend, as long as we have higher lows. So as long as this remains a low here, the yesterday carnival that we had yesterday, Maybe we're building another base camp. Maybe I was too premature up here to be looking at a new base camp to be built at this orange line. We had to go down and test this orange line. We'll see what happens. A couple of side notes. I've been talking about things to keep an eye on. Europe is not happy right now. And Italy, for the most part, is their credit default swaps are blowing up in terms of trying to attract investors to come in and buy their debt. They have to attract them with higher yields, and those higher yields start to raise red flags about what's really going on over there. So EWI is an ETF I've been watching, and it looks very similar to a lot of banks over in Europe. And I really think that this is kind of teetering. Let's take a look. Credit Suisse, pretty ugly chart. Okay, you can have your CEO, CFO come on and tell me everything's great, but I'll call bullshit every day of the week, just looking at the footprints in the sand of the people in the know. This is almost like a cartoon right here, where Elmer Fudd's hanging onto the ledge, Bugs Bunny's standing there with his last finger quivering, and he's got the hammer. I don't know. Interesting test. We did blow down and washed right back up today. So a stick save, if you want to call it, for Credit Suisse, but this is what the market's watching, in my opinion. Let's look at another one, Deutsche Bank. Heavily involved in derivatives, which are kind of spooky because nobody really knows what happens when you unwind a derivative and what the counterparties are doing and expecting. But these are ugly footprints in the sand, guys. The herd is telling us that they're bleeding, and they're waiting for Superman, QE4, some sort of, out of the back pocket news from the European Union. I don't know. But if this price action doesn't shape up, we're going to have some headwinds in our market as well. All right, that brings us to the end of the market recap. Miss anything there, Andy?
No, it was very good, and I agree with you as far as those European banks. You look at Deutsche Bank, and you're talking about a 50% loss in 5 months, basically. So, anytime you see that, yeah, you have to. And this is not a small, neighborhood bank. This is a big, one of the world's biggest, in the largest, derivative book in the world. So. Yeah, keep an eye on that, and fill up one.
I was just going to say, let's see what Goldman Sachs.
Yeah.
Let's see what Goldman Sachs.
Right.
Everybody thinks about it. XLF. Here's our ETF.
Like hanging on the ledge right there, barely. So
Elmer Fudd with Bugs Bunny standing over it. What about Goldman? Are they in a good mood these days? No, I don't think so. Morgan Stanley. Are they in a good mood these? No. So, as we sit here and watch technology and get excited about Amazon and Facebook, and we still have to remember that there is a lot of other sectors out there, and financials are probably one of the biggest, okay, because that's where it all starts, the spoke wheel of finance. And if there's trouble in finance, we have to take notice and take heed here. So that's your warning for the day, guys. I'm not saying it's going to crash, but we're at very critical levels here, and this price action's just waiting for some news to pop back up and bail out of this downtrend. So we shall see. All right. So next, what do you think? Should we do a Holly recap first, or kind of go over some information that I've gathered for them today and then go into Holly? What do you think?
I would probably just do the Holly recap first. And
all right. Well,
I could be looking for some observations. Excuse me, people. I've been traveling for the last 3 hours, so.
Yeah, I understand. Yeah. So there's 3 segments. You can see them in the windows up here. It looks like they all finished green. You can toggle through those segments by right-clicking in the main strategy window. We can go down to Holly 2.0. Looks like a smashing day of $5.46 on that histogram, and here it comes. All right, so looks like risk on, again, was the order of the day across the board, I might add, meaning that the triggers from the AI were working much better, letting them marinate into the close. Just grab this one as an example. Holly took 52 cents out of this one, but if you waited until the close for the continued strength throughout the day, it turned into $1.92. All right. And then I'm just going to go back to the first Holly segment. I've got some more stuff to show you, don't worry. But I wanted to highlight a few trades. And again, the big takeaway today is, guys, a unanimous decision across the board. Path of least resistance was long. Pretty much all longs in all 3 segments. I think there was 1 or 2 shorts maybe in the other, but the path of least resistance told us today was long. So if you were shorting and banging your head against the desk, it helps to know that maybe Holly didn't really see it that way. And if we have an unemotional, statistically perfect tool at our desktop, we want to refer to that occasionally. So the path of least resistance was definitely not short today. It was long. Also, the risk on, I think, across all three boards was the order of the day, meaning it wasn't really a choppy session. It was kind of recovering from yesterday, and then the bids were solid today, and the bids stayed there all day, and we just had a nice slow grind higher. I'm going to pick the top 3 or 4 charts here and tell you what I like or don't like about them. And I will also remind you all 4 of these or 5 of these have a higher risk on value than they do risk off. So we can kind of see here on a case by case basis why that aggregate risk on worked a lot better today, showing us that the path of least resistance, or I should say the order of the day, was to be patient and try and hold on and let your trades work for you. So this particular daily chart, interesting. I don't know how much far it has to go. Maybe it'll just bounce another day, but it was definitely an oversold bounce and a nice looking green candle. Might be some follow through on that one tomorrow. A-bus. I like this one a lot. This one is a nice looking recovery. Higher lows. The moving averages are all fanned out. And really, the AI gave us kind of an early warning, but really that orange line is where things got interesting. So if you were in this trade and then looking at that level, you can do one of 2 things. Or 3 things. You can get out and say, I don't want to stick around for that level. You can sell half and hope that it breaks through, or you can just get up and walk away and put tape over your sell button and hope that it does go through. But that was the real key level there on that daily chart. The buy tag was a bit earlier, but then it's looking for a bounce. Okay, so it's not really a bounce strategy. It's following the Mighty Mouse, which of course we have on our website at the bottom of the web page on the footer. If you look under FAQ, it'll say AI strategy thumbnail descriptions. And so for whatever reason, Holly saw a nice opportunity for 6% on risk off, 10% on risk on, because this was a $2 stock, ladies and gentlemen, and had a nice oversold bounce. Tomorrow may have a half a day before it runs back into the headwinds, but that was a nice oversold bounce on that one. I'll do 2 more. This like that Wix, I have to call it a pin cushion or a porcupine. There's just probably low liquidity. Let's see what this thing averages on the daily. This one averages, actually, no, I was looking at the wrong. It averages 2 million shares, but I don't like the way that chart is going down. I don't like the wickiness, the spikes. It's just kind of like nature saying, stay away. But it did break out of a, kind of a wedge there, or a resistance level, and that's what Holly saw. Holly doesn't discriminate like I do when it comes to saying, I don't like the looks of that chart.
Nope.
There's probably not a chart that Holly doesn't like, as long as the volume and liquidity is there. And then lastly, again, also a little bit extra on risk on. I like this one. Okay, I like it. Why do I like it? Well, it's uptrending very nicely. A couple of buy tags in the past. But look at what's happening here. We have a really narrow, this is the kind of one I'm going to want to put an alert on. So we're going to show you. 1305 is the high of today's candle. I'm going to go to 1306, and I'm just going to set it and forget it. I'm going to remind myself, Holly, possible swing breakout. Because I like what's happening on the daily chart there. I like the tight range. And today, little volume at the close, nice head start. This one could break through tomorrow and have another nice day of green. So that's where you see something and you basically just want to mark it up and tell yourself, I'm not going to miss this thing if it goes through. And that's where the price alerts come in. Did you want to say something? Just take
I wanted to add something because I'm just flabbergasted by you want to see Holly in a groove. Look at all those timed exits. I mean, you don't have any reduced risk or profit saves. That's just all those timed exits in a row. It's just that's beautiful, because that's when you can decide, hey, maybe I want to stick with she got out because she has to. She's optimized on time, but you might want to hold out for better prices to come.
Yeah, so when we see that, it's really not surprising to see that the 3 Holly segments all finished better in the risk on camp today. That's what we want to see, a nice slow grind in the same direction. All right, so I've got a little bit more prepared for you guys here on the Holly front. Let's do this first. Again, you remember there's 3 different segments now. There's the original Holly, there's Holly 2.0, and there's one we call Holly Neo. And Andy, you haven't seen this, but I stole this today. Dan kind of gave this, handed this out. The original Holly, Dan's thoughts on what it is. We all know what it is. It's a statistically probable tool that helps us find, direction and helps us find the edge. But I want to just go down to his words here. Holly 2.0, let's do this together. All right, so this is the same AI engine, but these strategies, many of them do have the same name as I mentioned before, but they're going to have different configurations and filter settings underneath the hood. So these same AI strategies have been adjusted to be oriented towards more aggressive approach to speculation. This version of Holly is designed to look for the ones that the original Holly might have missed. So that's why they're calling it Holly 2.0, kind of maybe cleaning up some things and being a bit more aggressive, looking for a little bit more volatility. And then we come down to the third one, Holly Neo. In Dan's word, this AI is a completely different approach to investment selection using new techniques that we ourselves are inventing in real time as we create this one-of-a-kind technology. Please be aware that all AI signals are visually graphed on a chart so they can be followed. What he's talking about there, of course, is the buy tags, sell tags, and whatnot. That seems to be kind of just a brief overlay. Every single, hang on a second. Every single trade will have stops and profits and suggestions. That will be needed. So I'll add a couple things too. The Holly Neo is also more, as I've been told, more loose, more liberal on the stops and the risk management. They're going to try and let them work more. And I have a really good example coming up to show you. So here's what we're going to do. I'm going to do a sneak peek into our back office here, and I went back 1 month. Now that we have the 3 segments pretty much with 1 month of data, we can go through and take a look. I'm going to start with Holly 1. Okay, Holly risk off going back to May. Outperforming and then starting to create some distance as we got later in the month. The blue line being the S&P actually underwater for the month. So that is 1 month worth of risk off on Holly 1, the original Holly. Holly 1 risk on is this guy. And as you can see, the risk on really started to take off again as well in the second half of the month. So it's been kind of a risk on month, I think across the board for the most part. But that's what the data looks like for Holly risk off and Holly risk on. All right, let's bring up Holly 2.0 and give you guys a visual. All right, Holly 2. On and off. All right, there's off and there's on. So risk off on Holly number 2, again, something happened at midway through the month where we got some really nice separation. Well, honestly, what it was, guys, was the market started to decline, and the AI is where it really starts to show its value is when the market's going down and the AI aggregate profit and loss starts to take off. A lot of it is short selling, a lot of it's sitting on hands, being very selective with trades, but regardless, that's what the risk off looked like. It looked like maybe 14 points on the AI and -1 point for the S&P. Then we get to risk on, again, where we talked today about letting them marinate into the close and seeing if you can squeeze out every last drop of them. Definitely a major improvement on Holly 2.0. It's up here around 50 points. So a huge, huge divergence between risk off and risk on Holly 2.0. All right, and let's take a look at visually the third iteration, which we call Holly Neo. And I will find it. There's Neo on and Neo off. Perfect. Neo off was a bit discombobulated. And again, like I came into this segment saying that the Holly Neo was programmed for more risk. More elbows can be thrown. Let it marinate a little bit more. Let it work itself out and see what happens. And as I said, I had a good example for you, and this is it. Holly Neo so far this month seems to not really, even though we finished up 650 and the market, of course, down on the blue line, the real value in Holly Neo is kind of what it was designed for, was to let it breathe and let it work a little better. So interesting to see that Holly 2.0 and Holly Neo, the second and third bucket of our new AI segments, are really doing well in the risk on parameter. And that's just what the data is showing us here for at least 1 month so far. So that's the most updates I have for you on what we're doing. We're building this for a reason, guys. This is a scaffolding or a skeleton, if you will, for bigger things down the road. I think probably the next big step for Holly would be to create a dashboard where we don't have to just look at numbers. We can see a whole dashboard with pie charts and risk on values and risk off and percentage long, percentage short, so we can really get a good sky view of what all 3 Holly segments are doing without having to switch back and forth. All right. Wasn't that interesting, Andy?
That was very interesting. Yes, I enjoyed that.
All right. So I think we go now to the trade of the week, which I have some thoughts on. Yeah. All right. Free visuals. Okay. BKE. Well, we've been trying to stay with what's been working. Now, again, last Friday, we just look at the market in general. We did have, we had this bunching up here. So looking for ideas to move back higher. Didn't really see this coming. But what it did is it allowed this trade to marinate the way, I know I love that word. It allowed it to develop the way I love it. I got to stop using that word. I highlighted part of the content for the actual email, and I said ideally this setup will take a day or two to trigger as we look for sideways consolidation before an attempt is made on a new 52-week high. That's where we are right now, and I'm happy about that. I'm really happy it didn't trigger on Monday just to fall back down with the rest of the prices. You know, it's doing exactly what I would hoped, and it's doing it with that orange pivot line that's been there for a while. So 2 days of red candle, very nice. Tiny bottoming tail, but a very narrow range day. This is really setting up for a possible move back up to blue line, which is where our actual trigger is officially for the trade of the week.
Cup and handle.
Cup and handle, exactly. And so that's what I was kind of hoping would happen, and it is developing. So now I'm very pleased with the setup here. And if the market wants to participate and if it wants to comply and move higher, a nice trigger would be just warranted. I mean, just perfect enough to work off these 4 green candles, a couple days, 3 days, narrow range, boom. I mean, that's kind of the setup right there that Shaq showed us when we got into it, right? Here was Shaq up and then a pullback, a little narrow range, one day less of pullback, but a red candle and a narrow range, and then it was off again. So hopefully we'll see that, but back to Buckle. Retailers have been very strong lately, and that's probably why this retailer has been so heavily shorted, because they've been weak for a while. But the stubborn shorts are waiting for this thing probably to make a new 52-week high, and hopefully it'll do what Shake Shack did for us a couple of weeks ago. Okay. What else can we say about this one? Again, we're just trying to go with what worked, and a good Zero Hedge article recently about how the short sellers are just being roasted right now. You know, the market is moving higher on new buyers, new investors, but also short sellers who are having to throw their hands up and admit they were wrong, and that continues the flywheel of momentum certainly higher. All right. Anything else are we missing on this trade of the week? We're just trying to do it working.
I think that's what you would want. Like you said, you don't want it to trigger if the market's going to fall out of bed the first day of trading. So yeah, it's setting up. Hopefully, if it is going to trigger, it does it before Friday. But
yep.
But no reason you can't keep it on your watch list at any time.
No, I mean, maybe it goes sideways. Maybe it goes sideways for a few more days. I don't know, but all I care about is if it does in fact trigger that blue line up there, I'm going to want to know about it. All right. Let's see. Chris, I see your question looking for scans to download. I mean, we have this channel 4 where all of our scans right here on channel 4, I'll actually click into it for you. These are kind of designed for people that have seen or heard, you know, certain scans. But I can't sit here and tell you which one to turn on and use. Every day is different. You know, trading is a discretionary, humbling, subjective sport, and we got to kind of find what works for us. We've done our best to try and, you know, put a template of ideas out there for you. So if you haven't been to channel 4 yet, you can find some interesting ideas. If you need some more, you know, guidance or some more color on your question, you can always email us, info@trade-ideas.com. All right, let me go back to loading my default layout, because as you all should know by now, the default layout is what Trade Ideas opens up to every time we start the program. And it's nice to have all your windows right there, right where you left them. So just a quick reminder, if you're doing some configuration in any of your strategies or making any filter changes, don't exit the program without first saying you will save it. And usually it's defaulted to ask you if you want to X out. It's going to ask you, do you want to save it? And if you have made any changes, you're going to want to click yes if you've made some changes. All right. Let's move on. where was I going to go next? Sector glance. So wanted to talk about maybe where the next sector is and where the next, hang on a second. All right. Let's look at sectors here. I've got this sector list set up so where I'm looking at only ETFs, and the ETFs are sorted in this window by which one is the strongest today. So today oil was the strongest. Obviously there's a nice looking chart, but we can go down here, and the purpose of this exercise is to just kind of look at some charts and maybe see where the next baton handoff might come, just based on what we're seeing in charts. Oil definitely strong today, coming out of a big gap. I don't know if I would chase that here. The oil service stocks, they look like they're conglomerating down here at this level. That orange line is there for a reason. Nothing really to see there. XLE's it's underneath all of its moving averages now. It's kind of under pressure. You can see the last 3 days in XLE falling under pressure on this 10-period downward sloping moving average. Kind of got a hold of the price action there, not seeing much. Semis had a pretty big fall from grace, and they look very similar to what the NASDAQ is looking like these days, right down to the doji that it put in today. So not seeing a whole lot there. Home builders, well, nice TP move higher and then all the way back down. What are you going to do? Steel, obviously having a tough time. Yes, the trade of the week back a few weeks ago, X, not doing so well because of that. Tried to break out and came back down. So, that's trading. Not all of them are going to win. Even a 60% win ratio, as long as you can manage your risk, you can still make money, with 40% losers a lot of the time. IWM, we've already seen that, very strong. Small cap. So let's go back to today. One of the big winners on the percentage side was a little big guy. Look at this, little big guy, Mighty Mouse. This just kind of occurred to me, Andy.
No, I saw that earlier today before I even left.
These are all strategies geared for, guess what? Small caps. IWM has been showing small cap strength. So tomorrow, coming into the day, if we see some trades coming through, triggers from Holly, and they're under $5, little big guy or Mighty Mouse, we actually know that we have some tailwinds behind us that are back on the IWM doing so well and holding up. Oh, and that's a mess. Natural gas, don't touch that. And there's the Qs. We've seen that. Technology is going to look just like it. Now we get into solar. Solar's definitely under some pressure here. That is not looking good. They've had every attempt to bounce. Now the moving averages are coming down to meet it. Oh, that brings us back to retail. What kind of chart does this one look like, guys? Oops, it looks pretty similar to that. So retail is strong. It made a new high just a couple days ago, pulled back. This is just a kind of a spitting image of our buckle chart. Kind of interesting. So retail gets the nod. Retail looks good. Retail, we need to keep an eye on. So far, small caps and retail are kind of footing the bill here. K-Web. I'm sorry, China stocks.
Yeah, kind of had a fall from grace there.
We chose the same word. Lovely. Spiders we've done. Moo is the agriculture ETF. Not a lot of plays off of that, and it doesn't really look that great either. Well, the treasuries, well, it's actually not a bad looking chart. They're above all their moving averages, a little cup kind of going there in the last 6 days, looking for a reason to come back up and maybe try these highs again. So this is a defensive kind of a setup here. People maybe coming out of stocks, going into bonds, who knows? But the TLT ETF looks rather strong. The Dow, we talked about that, looks terrible. Yeah, you know what? You're right, David. There's an old axiom that talks about the junk stocks being the 9th inning of a big rally. A lot of times, the final innings of a nice market move rally, you'll just start to look down at your alerts, and everything under $5 is popping like popcorn. I do get nervous when I see that, and you should too as well, because I've seen a lot in 20 years, and typically when you can start making money by throwing darts at small caps, that's usually the time to really be careful, because Well, we'll just see how it pans out. But in the past, there's a reason they say the junk stocks are running. Be careful. So just leave that.
Hmm.
Healthcare, not bad. Actually pulling back to a very definable pivot level here. Hopefully you guys can see that. Resistance, 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 and back. So if we can bounce off this level and move higher, XLV healthcare might be okay. So far we got small cap, retail, and healthcare. XLF, we looked at that earlier, not pretty. Looks like the European banks, Goldman and the others. Gold miners, well, GDX, they've been under trouble. They've been having some trouble lately. The gold, I'll just get ahead of myself. The gold ETF looks like death. Looks like those European banks. But the gold miners, they're trying to put up a good fight, but still, the backdrop is not happy.
No.
Regional banks, got to hold this support in regional banks. Silver is just a mess. Again, playing on the giant back and forth range in silver, basically 15.25 up to 16.25. Got a dollar range. That's it.
Yeah.
Gold miner junior is going to be the same. IYR. Now this is kind of interesting. Not bad. A nice move higher, trending higher lows, pullback. Now IYR is like the real estate REITs, commercial real estate, office buildings, things like that. That doesn't look bad either. Doesn't look bad at all. We'll see. The brokers, IAI, right? That's the broker index cheat sheet. Yep. Yeah, they're kind of falling from grace too. Not exactly happy. Maybe that's pretty bigger resistance than we thought up there. Biotech, big move up and then a big move right back to where it was. If it can build off this candle, it can probably do something. Gold, we saw that. Banks look like the other banks. And then lastly, the airlines. Probably not happy about oil being on top.
Mm-hmm.
So
Right.
just to rehash, I think the areas of opportunity we saw were small caps in the IWM. We saw retail, and we saw healthcare. Only 2 or 3 out of this whole group really look kind of interesting. So I'll make a mental note of that tomorrow and see what happens. I think the biggest point to watch is what happened today with small caps and what the IWM is showing. So if the junk stocks start running, smoke them while you got them, but be ready that it could be ready for, the 9th inning of a big move.
Mm-hmm.
All right. Thank you, Peter. All right. And again, Peter, if you want more color on the trade of the weeks, I'll be happy to respond to an email. You can always send that to info@trade-ideas.com.
Can you mind if I said something about the trade of the week?
Yeah.
And trade of the week always has to be, put up the spiders real quick. Let's face it, the IWM is not a true picture of the overall market. The spiders is by far the best barometer when it comes to what the market's doing. And guys, you always have to look at the spider or the overall market as a backdrop when you're looking at these trade of the weeks. Because look at the last 2 weeks in the spiders. It's pretty ugly. And let's face it, it's well off its highs. It's right in the middle of a pretty much range since the start of the year. It's not going anywhere. We could stay in this funky range for a while. For a very long time. And that kind of market is going to be a lot more difficult for trading, swing trading. Last year, the trade of the week, I can tell you right now, the record was incredible. This year, it's tough. Because we have to put targets and stops and everything for your benefit. But at the same time, we want you guys to, trade it with the backdrop of the market, and because nobody wants anybody to lose money. And there's so many variables that go into trading. So, these are just ideas, and they're free. They're ideas that go out to people, and but you have to be the one to make the decision if you're going to take the trade, when you're going to cut your losses.
I try to make these educational as well, the reason
Mm-hmm.
for, the reason why, what this is, what that is. So, the content in itself is a bit educational, but the market is the market. Things are going to work, things are not going to work. Our job is to manage risk as best we can. And again, we've had a couple of past trade of the week this year that never even triggered. And that was by design because, the market's been so tricky. There's been a lot of peek your head above, trigger the alert, and then boom,
Mm-hmm.
2 or 3 days of fall. And that's no fun. I've been there. It's no fun for anybody. That's why I kind of got a little excited when I see BKE doing what I hoped it was doing. It didn't give back all that move. It's either going to be a double top or it's going to turn into a cup and handle. because there really is no such thing as a triple top. That's another old axiom. There's no such thing as triple bottoms and triple tops. Once you've tested it twice, it's either going to hold or not the next time, if there is a next time. But I'm with Andy. This is hopefully turning into a nice little cup and handle. There's your cup, and then a smaller pullback as the troops gather a fresh hot meal, fresh hot shower, change of clothes, a couple good night's sleep, and get ready to make an assault on the castle again up here at that blue line. This could turn into a really nice cup and handle. If it does break through, it's going to trigger. The whole idea here is to catch the short sellers off guard and catch them in pain and panic while they buy to cover to get out, because that's kind of what's been working. Given it didn't work as well as we wanted to in Angie, but the stop loss is down here at the swing exit. We didn't touch it. A nice candle yesterday. I would have preferred to see a green candle today, but that's why I always try and end the email content with, please only risk the amount of shares you're willing to be able to afford should the price dip down to our swing exit. So, don't know what else to say on that, but Angie is still alive. It's not doing what I would want, but Shake Shack is, and I'm seeing a lot of others, including SeaWorld, which was on the short list the other day. These are all Shake Shack and SeaWorld. These are what we're hoping for with Buckle, moving higher through 52-week highs, dragging the shorts, kicking and screaming and forcing them to cover. So that's the method until it doesn't work anymore. And for now, it still seems to be working okay. All right, so we're gonna finish up here. We'll take 3 or 4 minutes of chart request. If you've got a chart you want to look at, we can talk about the levels and what we're seeing. It always helps to know if you're long, short, thinking going long, thinking going short. There's always good stuff to look at. So the questions box is open, and this will be our last segment for the webinar. So if somebody has a stock that they're not quite sure, you want to get a second set of opinions on it, feel free to go ahead and drop it in there. All right, do you have a view on the video? Yes, Chris, there is a scan that I've used, and I'll tell you, it's on channel 4. It's called Squeeze Me. And let's just take a quick moment and really identify what's under the hood here so you understand how simple and how direct this method is. Right now, there's only 5 stocks meeting my criteria of, ooh, and here's a nice one. I'm gonna put that one in there right now. Big short float is all I'm gonna put. I don't know if that's the real number or not. Big short float, and that's going sideways. That's what I want. And this bet down here, I can bet your bottom dollar, this was a lot of short covering as well. Now we're in consolidation mode, a move back to new highs. I'm gonna adjust that a little bit. You can adjust it on the fly. If that triggers, we could have another massive short squeeze coming in DSCA, DISCA A. Let's see what else is in here. That's an acquisition, we disregard that. Not bad here, you can see I've already marked it up. Nice flagging. FOSL has 39% of 45 million short sellers, and they're not going to be happy if it breaks through that again. So this is the scan, Chris, that you asked about, and look how simple it is. 5 filters, a price filter. I'm going to come back to that. 25% is the minimum cutoff, so 25% short of all the stock certificates in circulation. 25% is a pretty good starting point. Float of 1 million shares, rather insignificant. That covers most things on the minimum side. But here's where it all happens. Position in 1-year range, 95th percentile. So everything on this list is at the 95th percentile. 0 equals a 52-week low and 100 equals a 52-week high. We are right there underneath a new 52-week high at the 95th percentile. That's what we are looking for. Pedro asks, how do you know where those shorts are? Well, I can pretty much tell you that at a 52-week high, unless somebody's been holding on to that short for longer than a year, there's not too many people in the money. That's why I like to focus on the 52-week high. Yes, you could focus on short squeezes in mid-range stuff, even downtrends. I've got one for that as well, but it's not as useful, I don't think. This is looking for trend change reversals that have high short floats. So to answer your question, Pedro, using this method, I just happen to guess and make an educated guess that there are no short sellers that have a profit staring them on the screen. And the higher it goes, the more that loss is going to get bigger, and they're going to probably kick into emotional mode and want to get out. So this is the scanner for that. It's on channel 4. I'm also happy to drop it into the chat window right now, but it's available. It's called Squeeze Me. It's one of the more popular ones. and I'll put it in the chat window right now, and then we'll take a look at the video. All right, let's see what NVIDIA is doing. I already know it's a semiconductor, so I'm going to guess it's had a rough couple days. Yep. All right, NVIDIA. So, a couple things of interest here. Found support back here, and let's make this chart bigger so we can really see what I'm about to say. Two things. Actually, I'm going to go for the full gap. Gap fill, horizontal line. We had some support just above that gap, so we never filled that gap back here. Well, the price action had a foregone conclusion. It wanted to fill that gap, and so it did. And notice the buying at the wick at the end of the close yesterday popped right up, and look at where we closed, right at the pivot level, filling the gap level. Got rid of a lot of extra frothiness up here. Not a bad level to watch. I wouldn't try and write it down into this wick level, but if you want to use this level as a level to lean on, we could call it 239.25. That's the resistance here. That's the breakaway gap here. We have now filled the gap. We closed right at the gap yesterday. A little bit of a move last night, and now we're sitting just above that level. I think you could make a case for trying to make an entry, but you've got your out, a very quick, easy out right here at this orange line. And you're feeling a lot better than these guys up here that did what we talked about. This looked all great right back here. You can kind of fool ourselves. It looked great, and this day it looked even better. It was breaking out, but then it was a fake breakout. So all these people up here would love to be able to have your ability to buy down here and use this level to lean on, because the ones that are high flyers, when you crawl out on a branch of a tree and that tree branch breaks, this is what you'd expect. But when you use that branch breaking of somebody else as your opportunity to get in, sometimes you can have some really nice entries and staying power. So that doesn't look bad. All right, we'll do one more. We'll do, let's see. David's saying Fossil had a lot of holly buy signals too. Yeah, it did along the way. You're right.
All right, some buy and some sell.
Oh, you're right. It had a little of both.
Yeah.
But the chart speaks for itself. And again, this triangle here that's building, I got that blue line set, so I'm not going to miss it if it does, in fact, break through. All right, I'm kind of talked out, and you guys had some great questions today, and anybody wants to follow up, info@trade-ideas.com. We can follow up with you all. Thank you all for your comments. Let's go ahead and bring the slideshow back up, and let's bring Scott back in. And I think he's got a promo code for some people that might want to think about using it.
Yeah, we do. First, though, let's mention that we do have a podcast that comes up most every week, so make sure you subscribe to catch the new ones. You can get the newest and be ready to catch the new one on Friday by searching for Trade Ideas Podcast in whatever app you listen to podcasts in. Just add us as a subscription. You should get the newest episode, and then you'll be ready for the next one as soon as it comes out. There's good info there. Check out the back catalog of existing episodes. Lots of good trade ideas, trading info, good stuff about the markets. There's also a good book that both Andy and Steve contributed chapters to. It's 5 Ways to Win in a Post-BTFD Market. So we're currently in a rocky market. It's good to have these 5 strategies in your trader's toolbox. It's a free book. Just go to trade-ideas.com/ebook and put in your email, have it delivered to you. It's a nice read. Keep it saved to your computer. The code SUMMERTIME, all caps, like you see it here, is a great way to save on Trade Ideas this month. Enter that in when you purchase, and you save 15% off your first month or year. If you're already a subscriber and want to upgrade to premium, just use the same code when you do the upgrade path. Just go to the home page, click the login in the upper right, and then select the change my subscription after you've logged into the account administration portal, and save on that upgrade. First month or year of your upgrade, 15% off, which is big for new subscribers or upgrade subscribers if you're getting the premium annual. It's biggest savings. So if you're already a monthly subscriber or something, hop on up to the premium annual and save big. If you have any questions, just email us info@trade-ideas.com. Follow Steve at Today Trader. Follow us at Trade Ideas also. Find us on Facebook. It's facebook.com/TradeIdeasPro. Like our page so you see everything we post, and then you can share that with all your friends. Sometimes there's good info. Thanks all. We'll have a recording up later on tonight or tomorrow and give you an update when that's available. Thanks, Steve and Andy.
Cool. All right. Thanks a lot, everybody.
Thanks, everyone. See you Thursday.
Later.